Hey guys, how's it going? Value Venture Investing here today. So today we're going to have a little bit different of a video, so stick around. This is a really interesting video. Now, I had the founder of Blackstone Commodity Group. He's also the founder of Bowlinite. Contact me a little while ago here. He wanted to collaborate. He said he'd watch some of my videos and he'd really like the channel. So we had a Zoom call and we discussed a lot of different things. We realized we had a lot of complementary strengths. He's super, super into technical analysis. He's really in depth on the markets. He's been doing it for a long time, like myself. And anyway, we seem to have a lot of value that we could deliver to you guys. So we're kind of thinking of what kind of video we could do, what's going on lately. As of lately, I've been thinking a lot about the market and thinking about how do I protect myself more. I've seen my account balloon quite a bit, and I know that probably a lot of you guys, if you've been following as well and you're investing, your accounts have done very well as well. So I started thinking about gold. We've seen gold hit these record highs here lately. Pulled a bit back a little bit as of recording this today, but going forward, it made me wonder. It made me think about alternative investments. It made me wonder about what we should be doing going forward. And I thought that this was a great opportunity with Mukarram, here's his name, to go through this, to give us his insight on it, and I could ask him some questions. So I did an interview with him, and we're going to get into that right now.
Hey, Mukarram. Thanks for joining us here today. How are you doing today?
Thank you. Thank you very much for taking the time.
So thanks so much for coming onto the channel. Thanks so much for contacting me, reaching out. I think that we can provide a lot of value to both our user bases. So let's just start with you. Tell me a little bit about yourself, about these two companies you founded, so the viewers know who you are, what you're all about.
Yeah, so about 15 years ago, I started in the trading. Like I started trading, and then I was in the commodities sector significantly. And over time, I grew my trading to different asset classes, right? And then about 10 years ago, I founded Blackstone Commodity Group. It's a little over 10 years ago now. And Blackstone Commodity Group, what we do is we help a lot of our clients diversify into alternative assets. It could be like physical precious metals like gold and silver. It could be real estate. It could be different asset classes that we believe are oversold at one time and have the ability to give significant returns as they go into an uptrending market or anything similar to that, right? And then what I did was, as I was building Blackstone Commodity Group and as I was trading my own proprietary funds in the market, I realized that a lot of our clients wanted like the different ways I look at the market. How do I trade something? Why would I trade a particular market versus something else? And that's when I founded Bullionite. Bullionite is I usually call it as my educational arm of my company, right? And that's where we have all of the education when it comes to trading and market probabilities and market setups and trade setups. But as time went on, I realized that trading is more 75% mental, 25% is skill. So there's a lot of educational material that I focused on when it comes to how do you maintain your discipline as a trader, your motivation, many things to do with the mindset as well. So we'll cover those things as needed. But those are the two companies, right? Blackstone Commodity Group is where I look at assets and we invest into different assets. And then Bullionite is where I do all my education videos and educational series.
Okay, yeah, so that's kind of like what we talked about. The bull night, that's kind of what we have in common in terms of educational and providing value
Exactly.
to people. So in terms of mindset, I know we're not getting a lot of mindset on this video, but what makes you, want to do what you do today? What makes you still really passionate about both Bull and Night and Blackstone Commodity Group?
Okay, so
Yeah.
that's a very interesting question because when I first got into investing and trading and the industry itself, it was more from a need of looking at it as a career, right? And then getting into it as a career and advancing my life and how I look at things and going on from there. But what's very interesting is as I got deeper into trading, um, something happened that was, to me, just completely changed my life. And that is, one day I realized that trading is the very essence of creating money. You know, it's so different to earning money where you have a set of rules and of course in trading you have rules. Don't ever think that there's no rules in trading, and that's something I cover as well. But this creation of money is a very important concept. And what I mean by that is you can have neurons firing in your mind, you can have certain chemicals going on in your brain, right? And then you take that, which forms into an idea, and then you press a button. And from that press of a button, you create wealth, you create money. Sometimes more money than someone can make in a year of working or in a week of working. To me, that was life changing when I understood that you can literally create money. Okay. And that's why I got so passionate about it. And I wanted to learn as much as I can. And then from there, when I got really good at it, I wanted to share that concept with people, not just the fact that they should trade, but understand the philosophy of creating money, because that's what leads to you completely taking the shackles off of your life. And that's why I'm so passionate about it. Even today, and God willing, for the rest of my life, I will continue to be like that, because you can never stop that creation process.
Just goes on forever. Yeah, it's kind of like you kind of remind me of a video I was made me thinking of making in the future. It's like the different stages of your life. When you start becoming more successful, you want to share that knowledge, right? So do you remember when you had that epiphany, or that creating money versus just earning money? Because it's all about the mindset. And I think you and I, like I said, in our last interview, share a lot of that mindset. That'd be some good discussions to have. We might not be discussing that today so much. We'll maybe talk about more about gold in the markets, but do you know what triggered that? I know maybe it's a little hard, but I just wanted to know when that started.
Well, I mean, it's been a long time, right? I've been trading, but it's a great question. In the beginning, I think especially for the viewers, this will help, because when I first got into trading, I looked at it as earning money, because a lot of people say, oh, if you can make this much money per day, or if you can make this much money per week, that's how a lot of these gurus, kind of teach you, right? When it comes to trading. I never followed that principle, but you would always hear it, because you'll get emails, you'll watch things, and you'll say, oh, okay, so that's what I should do. But here's what happened. About like maybe 8 years ago or so, as I got into a massive trade, especially I was in the crude oil market when crude went from $33 a barrel to $148 a barrel. That was in 2007, 2008. I was part of that market as well. And then when gold went up from 685 to 1,921 from October 2008 to September 2011, I realized something, that everyone around me was talking about limits on how much money you can make, right? And then I figured out, hey, the markets have no limits. Because when people said gold at $1,000 was expensive, well, gold went to 1,900, right? When crude oil was at 50, when we were thinking it could go to $100 a barrel, people would say, I don't know what it is, Mukarram, that you're thinking. You might be completely crazy. But crude went to $148 a barrel. So what that told me is that the markets are limitless. That's why if you go to Bullionite, my site, you'll see that I have this philosophy about thinking about limitless gains. And that's what caused me to think about, if you're earning money, you can never have limitless gains. It's never going to happen, right? There'll always be a limit to what you can earn. But if you're creating money, you will have limitlessness. And I want to make sure that everyone who trades or is very serious about trading understands this concept, because the markets are limitless. And if you come into it with the wrong set of tools, and thinking that your profits are going to be limited, or this is going to be limited, right? Then you'll never get the most out of the markets. So that was my big change in my philosophy, when I said, okay, the markets are limitless, so I have to start thinking about abundance and limitless, rather than saying, oh, I only want to make $500 a day or $1,000 in a week. That's not what the market's designed for. Yes, it's great. Yes, it could be more than what you're making, but you're not getting the most out of a limitless entity.
Yeah. I mean, confining yourself to certain finite limits, definitely, it's not something that I do when I'm looking at my investments either. But so in terms of the market as a whole, we're kind of getting into the mindset here, which I'd love to talk to you about. But I wanted to get your thoughts on the market as a whole. Now, I've been talking to my viewers for a couple of years now. I remember thinking to myself, probably maybe 3-4 years ago, that markets were getting pretty high, and they still continue to go. I mean, we have a lot of geopolitical risks. We got a lot of things going on right now. And I think as of today, recording this, we're almost all-time highs again, even after this crisis that's occurred. So we kind of discussed this a little bit in our first conversation. What are your thoughts on the market going forward? Where do you think we're going? What kind of risks do you think that, we can see, especially going into election year as well? What are your
Yeah,
thoughts?
I mean, that's a great question when you
Yeah.
think about the different markets, right? So I think I want to answer that question in the way that'll best benefit your viewers, right? So first, I think when you look at the equity market as a whole, the equities section, like if you look at the Dow Jones, the S&P 500, the Nasdaq, I mean, those are the three big indices, right? I mean, yes, there's other indices, but what I'm saying is, the equity markets as a whole, they've gone up for 13 years plus. Okay, they have become extremely overbought. Now, whether they're overvalued, undervalued, I don't really look at that much, but I know that they've become completely overbought. Like if you look at many different indicators, and if you look at the extent of how much the market has gone up, right? So for me, if you look at even my videos and what I've done before, in 2019, in the middle of 2019, we were sending out alerts and talking to clients and making videos about why people should be thinking of protecting their funds from the stock market. Okay. And here's why I say this. I don't care if the Dow Jones goes to 30,000, okay, from 27,000. I don't care if it goes from 25,000 to 27,000, because the bulk of the movement from the low in March of 2009, which was about 6,600, it's gone from 6,600 to 28,000. So you should be thinking of how do you take that profit or move funds from that market into something else that can do a similar kind of movement in terms of like the breadth and the strength of the market, right? Instead of sitting there and thinking, well, how much more can I get from the stocks, or how much more can I make? Because to me, that's when you're just holding on to something that is completely overextended, okay? So even before the crisis, even before all of these things, the market was very top heavy, and the market's highest probability direction, I talk about this when it comes to trading. Trading is always about probability, not possibility. The highest probability direction for the stock market is for it to come down. The only reason it keeps going up after coming down is because people keep printing money, and just raising the value on something that doesn't exist, pretty much, right? If you let it correct on its own, it should be much lower than where it is, okay? The other thing is, I talk about the volatility as an indicator when a market, like I always say that markets are right. It doesn't matter whether you're right or wrong, the markets are always right, right? And if you look at how much the market dropped in March of 2020, just a few months ago, it showed you that in 1 week, it took out like a few months worth of movement. In a month, it took out a few years worth of movement. And what that tells me is that the market wants to come down. So however much it goes up, understand that the highest probability direction is for it to come down. And the best thing that you and all of us can do, and our viewers and everyone can do, is prepare yourself to take those profits and put it into something else that can go up significantly, right? Because the whole point about being in the markets and trading or investing, the two things are different. Trading is different, investing is different, is to take profits. You're supposed to take green from the market, not try to be right.
So yeah, I mean, trying to be me a bit of a devil's advocate here. Like I said, I've agreed with you for a long time, but my thoughts kind of being like, can you fight this? Can you fight these zero rates? I think a lot of this has to do with, not only printing money and all the, the quantitative easing that we got going on, but also, the fact that what else do you do with your money, right? So I've been kind of preparing my portfolio a little bit like that as well. I have some things that maybe are not the best inverse market ETFs, but we won't get into that. There's slippage, and they end up basically losing value quite quickly. So can you fight that, and for how long can you fight against that trend? And maybe what's the best thing to do? Would the best thing to do maybe to start hedging into gold a bit, completely getting out of the market, or like taking shorts? What's your thoughts on that?
Okay, so I think the first thing that I want to make clear in that question is I never look at trading or investing in a way of fighting something, okay? You should never look at any strategy you have in terms of fighting a particular trend or fighting something that's going on. Like, I don't want to fight monetary policy. I don't want to fight. I mean, that's where things get personal, right? I mean, like Bruce Lee said a long time ago, he said, be water. always be water, because if you pour water into a cup, it becomes the cup. If you pour water into a jug, it becomes the jug, or a pot, it becomes the pot. So you just got to be like water and flow. Let water flow. Okay. But that doesn't mean that you shouldn't be prepared to take your profits and say, I'm content with what I've made and I want to go into a different asset class that may move in an inversely correlated manner. This is why, it's great that you said that. I think it's incorrect to say, well, I should continue to be in the stock market because I think it's going higher and higher, even though it's stretched for 13 years, it's completely overbought. Because I have no other place to go to. That's incorrect, because you do have places to move your money to. For example, that's the whole reason why gold and silver have gone up so much, right? If you looked at a couple of the videos we did in 2019 and going towards the end of 2019, we were talking about the fact that as the stock market was creating new record highs, gold was creating new monthly highs. And that was the canary in the mine for the stock market. Now, we didn't know that a crisis was about to happen in the first quarter of 2020. We didn't know there was a crisis that's going to kind of, have a ripple effect from China all the way across the pond to the United States and Europe. I was actually in London, in the early part of the year, and we were talking to different people, but the crisis was not the biggest thing we were talking about. But we knew the market was overbought. And we knew it made sense for people to move funds out of that. Whether you're moving all of it, a portion of it, or whatever it is, it's up to you, and your tolerance. You should move that into precious metals, because precious metals made sense, not because I love precious metals every time in my life, but it made sense as an asset class that had become oversold after it created its record highs in 2011, and then have started what I call a baby bull market, in the beginning of 2019, and had all the signs of wanting to go much higher. And guess what happened? Gold went to a new record high just a couple weeks ago. Silver blasted through the 20 handle, after frustrating between 16 and 19, just like it did in 2008, and then blasted to almost $30 within a few weeks, which is like a 50% move up, right? That's why I think if you ever want to create money and you want to create wealth, you also have to teach yourself to take out a large chunk of profits that you've made from a market that has had its time, and then go into something that is extremely oversold and will now give you the ability to again grow your funds in that new sector, right? So just to make a point, I don't think of fighting the stock market. I won't. Like, for example, I'm not shorting it. I won't short the stock market right now, because that's kind of because it hasn't given you the signal to do it yet. Maybe in March, there was a time you could do it a couple of days and you could make some money, but you still don't have the signal, because as soon as the stock market drops, guess what happens? All the leaders in the world go back and say, print money, print money, print money, because they don't want it to drop, right? So that's why.
Yeah, generally, I never short, and if you look at the general introduction, of course, you're more of a trader. You do a lot of short-term trading, I assume. I'm a long-term investor, so you never fight that long-term trend, and shorting can be very dangerous. But yeah, in terms of, maybe, of course, this is just an educational channel. We're just talking here, but moving part of your portfolio into gold, I think of that myself as, it's always been thought of as a safe haven asset. But we also might see significant returns right now. And like you said, I think it's very interesting that we've seen gold appreciate. Of course, it's down slightly as we're recording this today. Got hit pretty hard, but I think that's related to maybe some stuff going on in Russia right now due to treatment or something. But we've usually seen it, inversely related, but now we see them kind of moving in tandem. So like you said, canary in the coal mine there. So I'm curious in terms of, I'm not an expert on technical analysis. So you saw these things coming. Is there any kind of insight you'd give us in terms of the technicals going forward? Maybe what your thoughts are on gold going forward, what the charts are showing, anything like that?
Yeah, definitely. I mean, I can show you a couple charts on both gold and silver and kind of show you, the breakout and what happened, and also explain kind of a little bit about what's going on today as well. There's other reasons related to today's movement. But one thing I wanted to mention to you is that point you made about, well, when you look at the stock market and precious metals, like gold specifically, most people think it's inversely correlated, which is correct. If you take a longer term time frame, it is inversely correlated. But here's what's interesting about gold and equities. There's always a small time frame in between where gold will move in the same direction as the stock market. Okay. A lot of people ask me, they go, well, Mukarram, when in March, when the market dropped significantly, why did gold drop first? That's the same thing it did in 2007. When the stock market crashed, gold came down significantly and then turned around and kept going higher as the stock market kept going lower, right? Why does that happen? Because there's what we call margin-related liquidation, right? If you're in a profitable position in precious metals and then you get margin calls on other instruments that you have on your account, you would most likely sell off your precious metals holdings or your precious metals contracts or GLD or gold futures contracts, whatever it is, and then meet your margin calls. That's what happens. And I'm not even talking small accounts, I'm talking much larger accounts, right? So you will see that where gold sometimes will come down with the stock market, but then it'll turn around and go up significantly as the stock market continues to go down, once you go into that trend. But when it comes to the technical analysis of this, or without going too deep into it, I would like to share my screen, and kind of show you a couple charts with gold and silver. Is that something that you wanted me to do for your viewers?
Yeah, I think it would provide some, some value there because, like I said, I don't often talk about technical analysis on my channel. I have briefly, and that's why I thought we'd be kind of a good match, is that you are the expert on that, right? And in terms of gold, I do have a little bit, through, proxies, if you will, equities, gold miners, stuff like that. But in terms of the futures contracts, where is gold going? I'm not an expert on technicals at all. So yeah, it would be great if you could, bring it up, maybe kind of explain with the chart what's been going on, and the technical setups that you see going forward. Yeah, that'd be great.
Okay, yeah, sure. So let's kind of look at some charts right now, okay?
Okay.
So let me share my screen and go into my gold chart. There you go. So you should be able to see this chart, correct?
Mm-hmm. Yeah, correct. We can see her here.
Okay, perfect. So what I'm going to do is I'm going to annotate a couple things here so that people can understand what they're looking at. First, you're looking at a gold futures contract, which is also the continuous contract. So you can also see this is you can also say this is the gold spot contract. Okay, that's what it is. Now, if we want later on in different series or parts that you want to do, we can look at separate futures contracts like the August gold contract or the December gold contract, things like that. But for today, let's just look at the spot gold and spot silver market. Okay. The other thing to keep in mind is we're looking at the daily chart that's right here, and we also have what's called a candlestick chart. That's what's on, right? And we can go into that later, why candlesticks, why do I choose candlesticks, and why is that better than something else like a line chart or something like that. Plus, when I change the timeline of this chart, I'll change it right here, and you'll see it probably go into a weekly or a monthly or things like that, okay? At the bottom of the chart, obviously, if you're looking at a daily, you're seeing the months down here. You can see these are the months, right? And then each candle is an entire day's worth of movement inside of a month. That's what it is, okay? Now, that being said, kind of giving out the layout of the land right there, right? Let's now look at this chart and see what gold has done as the stock market was coming down significantly. Now, what's interesting is gold obviously started moving higher before 2020. You can see that gold, formed like an energy base right here. We call it a consolidative energy base, broke out and went up significantly, right? Now, it went up from 1400 or so to about 1700, almost 1680 right here, right? You can see that. Now, if you look at this time period, November through, even November through December, gold started going up even before the stock market came down. This is what I meant by the canary in the mine, that it kept taking out daily highs and weekly highs when the stock market was going to record highs. Okay, that's how you know something big's coming up. Now, what's interesting is if you look at the month of March, now everyone knows this because the crisis kind of really unfolded in the month of March, whether it's in the United States, whether it's in Europe, in China, it was a little earlier, right? In Canada, wherever it is, everyone kind of felt it in the month of March. And you can see that's when the stock market dropped, about 10,000 points. That's what, the Dow Jones dropped about 10,000 points in a month, okay? And gold, guess what? Gold came down significantly during that time. And a lot of people that we were positioning in gold, or we were talking about gold, and as I was trading gold, people were worried about, well, what does this mean? Is gold going to, some people told me, is gold coming to $1,000 an ounce? It's going to $700 an ounce, you know? And we were like, trust the charts, trust the technicals. Now, keep in mind, I am not just a purely technical trader. I always believe in order to be a great at what you're doing, or great trader, you have to fuse fundamentals and technicals. That's what will make a good trade an extraordinary trade. Okay, and there's a learning process to that, and we teach that as well to the people that we work with. Now, this is what I meant by, in this drop, that this is margin related selling. If you knew that this was why this was happening, you wouldn't panic. You would know that gold is going to come down as the stock market comes down, but then it'll turn around and go up significantly. Now, what's interesting is when the fundamentals came in, where the government started saying they want to print more money, like the US administration said they want to print $6 trillion or $6.5 trillion as a rescue and relief package. I don't call it a stimulus package, by the way. It doesn't make any sense to me. It doesn't mean any stimulus. Stimulus means you make people spend money, but if everything's closed, you can't spend money. You know, to me, it was like a rescue and relief package. That's what it is. Immediately as the dollar started getting hit, and the value of the dollar, as you print more, you will see dollar denominated assets go up. And you can see gold, had a massive move up. We call this a positive engulfing candle pattern right here with a doji. And then gold went up from 1440 or so and kept going up to over 2080, about $2,100 almost, right? That's a massive move in the market. And this is why.
So
okay, go
sorry,
on.
can I stop you just for 1 second? I might take your screen here. I'm not too sure. Just before we go out a little bit on, I just find this very interesting. Maybe my viewers will as well. What you say about those margin calls and why gold drops like that, very interesting. Makes a lot of sense. Is that something that you've seen through your trading happens every time we see the market kind of get hit, go into a bear market, or at least the market pulls back? Or is it something that you see time and time again, or is it kind of hit or miss? Because like I said, I never thought about that. I never knew that before. So I was just wondering. Yeah,
something that you will see time and time again on anything that's inversely correlated to the stock market. So it could be any asset. If it's a heavy asset that institutions choose as a inversely correlated instrument to equities, you will see that. And many retail traders, people who have stock accounts and their E-Trade accounts or whatever different accounts that they have, if they choose an instrument that is they believe is inversely correlated, and that has gone up for a while, and then the stock market drops, most of the time you will see that happen simply because of two reasons. One, people don't want to believe that the stock market is done, right? So they want to hold on to their stocks rather than sell that out, which the right thing to do is get out of your stocks, okay? Because if you've been in it for a long time, you've made a significant profit, get out of that, stop the bleeding, go into something that is in a strong uptrend and can make you money. But rather, they'll get out of their profitable gold position, meet their margin calls, and still holding on to trades in their stock market that can go down significantly. So yes, it happens over and over again, but it only happens when you have this massive directional trend changes in the market. It doesn't happen because the stock market drops 500 points in an uptrend. That won't happen. But when you're at the top of a trend, and then the stock market drops like 2,000-3,000 points, and you can clearly see there's a trend change coming, then that would happen.
Very interesting. Okay, so yeah, sorry, I kind of cut you off there. And continue going forward what goes on next.
We were saying, the gold market formed a beautiful oversold condition. When you look at an RSI as well, and we'll go into that in different videos we do together. The RSI became completely oversold, and then it started turning, had the signal right here, and went up significantly. What you'll see is, when you look at charts, you'll also see this area right here. This was kind of a congestion area, or what we call a resistance. So the market would go up there to the 1760s, come back down, try 1760, come back down, 1760, and then blast through it. Usually what you have to understand is, when a market that is in a larger uptrend comes into a longer term resistance zone that was established a while ago, like maybe in the 2008, 2011 range, you will see this kind of a movement where the market will tend to come back and forth inside of that region and kind of be frustrating. It won't break out right away. But what's interesting is after about a triple top or sometimes four tops, it will break out. Like for example, 1, 2, 3, and it broke out. You see that?
Right.
That's
That sometimes indicates when a market's trading sideways, it's either going to explode up or explode down, kind of thing.
yeah,
Right? So,
exactly.
like you said,
You
yeah.
can call it a
Okay.
wedge or different terms.
Right.
But the highest probability, that's why I talk about probability, the highest probability direction for this market as the fundamentals got better and better for gold, and I call it like a perfect storm coming into play, because with the crisis unfolding, with money printing going on, US-China trade relations getting worse, right? Just a couple of weeks ago, they closed down a consulate in Houston, a Chinese consulate or a consulate from China. That's a big deal. When things like that happen, it's supportive of gold, because remember how you said gold is a safe haven, right? So people go into that when there's fear. So the highest probability was to break out, and it did break out. And then from that breakout, it went up a significant amount. And in my like, see, you have to train your eye when you look at the chart. So in my opinion, when it broke out from this range, I knew it was going to create a new record high. I knew it, because that's how gold, I've been trading gold for a significant period of time and these different markets, and it felt that. The other thing I knew, and when I do my webinars and things like that, is when you break the previous record high, which was around 1921, around there, you're going to approach 2000, maybe come back down from 2000, or you're going to break it and then come down first, because 2000 is one of those kind of even numbers, right? Or main handles, like 30,000 Dow is, 20,000 Dow is, $1,000 gold was in 2008. So you will come down first before you have another massive rally. So for people who are worried about this pullback that's happening now, you can see that very clearly. And it was communicated from the technicals very, very clearly. The RSI became extremely overbought. And then there was a sell signal with a negative engulfing candle that told you, if you are a short-term trader and you're in this market, you should be getting out. Now, if you have physical metals and you're holding on to that because you believe you can have a much bigger run-up and you can see a bigger depreciation in the US dollar, then there's no reason to get out. You just add to this position after it curls and kind of bottoms out, right? So this is the gold chart. One quick thing that I'd like to show is also on the weekly, so that people can understand why it's coming down. If you go to the weekly chart, you'll see that, and we'll just give it a minute for it to come up, and you can see how the weekly got extremely overbought as well down here, and this is something that people need to realize, that when a weekly and a daily kind of align, then the drop will be a little bit more significant than they expect. And that's why you have $100+ drop today, because it got overbought on a weekly, got overbought on a daily. So it needs to come down. I call this like a godsend. This is a gift. If you're a trader and you know the bigger fundamentals exist for the dollar to continue to depreciate, for the economy to have a big effect from the crisis, which it will continue to have for maybe a year or two, then you're looking at this as maybe, hopefully it'll get into like a support zone. And once it gets there, that'll be a great buy for this. Now, I'm not saying, because see, we don't have a crystal ball, right? We don't say it's going to come to this price on this day at this time, but you can look at ranges. And I don't think today's movement down will stop just today. It might go on for a couple more days, then consolidate and show you its hand. The market will show you what it wants to do, and then you can come in.
So I think one of the big questions for a lot of people right now then is, we've seen kind of gold for quite some time being relatively stagnant. Going forward, after we see this consolidation, in your opinion, nobody knows, of course, what are the charts showing you? What are the technicals showing you? Do you think that we could see some of these numbers that people are talking about, some of these analysts, $3,000, $4,000 possibly? Are we going to see this, bull run continue? Or do you think these are the highs that we're seeing right now? In terms of, say, a long-term investing, maybe 5 years, couple years, something like that, right?
Yeah, very good question, right? So in terms of like ranges where it's supposed to go, first of all, from what gold has shown what it can do, from past history, not saying that past performance is ever indicative of future results or anything like that, but you can learn a lot from history, right? Gold is usually in a cycle that's between 3 to 5 years. Sometimes when the fundamentals are really strong, when you have like a perfect storm of events like you're having now, that cycle could be 2 to 3 years instead of 3 to 5 years, because you can have a massive run up. Okay. Now, here's a great way to kind of look at your question. When people are saying, well, how far can this go? Where would this go? So for that, you need to go to a monthly chart. And if you go on to a monthly chart, what you'll see is a couple of things here. And you can already see that I have my trend line that was drawn down before when I was analyzing gold and how we got into gold, right? Is that if you look at the 2008 time frame, okay, that's when gold went up, when the stock market started crashing. Now, at that time, Taylor, remember, there were only two major triggers. One, the subprime mortgage crisis. The other is the stock market crashing. That was it. That caused gold to go from 685 to 1921 or so. This was this big bull run, okay? That was almost like a 300% move up in the price of gold, okay?
Wow, yeah.
Now, here's what's interesting. Then gold came down, went into its bear cycle, right? And then you can see as it was coming down, it never took down its downtrend line on a monthly. Now, monthly is very significant because you're looking at years worth of data, okay? That's what's important. It's not daily, it's not weekly. So it takes a long time for a monthly to form a pattern, right? Then
could you, sorry to interject there again, could you just maybe explain the difference between the monthly, daily, and weekly? Just for some of the viewers that might not be, up to that, up to date on that, not up to date, but know too much about technical trading. It's a better way to put it.
So, I mean, the three most common time frames of charts that you look at are the daily, weekly, and monthly. Now, what does that mean? It simply means that a daily chart will show you an entire day's worth of movement. So if you choose 1 week's worth of daily bars, it'll tell you what happened in that 1 week of time on a daily time frame. Now, if you change that into a weekly chart, what happens is the weekly candle is an entire week's worth of movement. So then at the bottom on the time frame, it'll show you months, because now it has to show you more than 1 week, right? So you'll see 4 weeks inside of a month and then like that. So that'll give you a kind of a little bit longer term time frame. So the daily is the shorter term time frame, and then you have the medium term. Now, for the longer term time frame, you change the chart into a monthly. A monthly means each candle that's in this chart is an entire month's worth of movement. So you have all of those 22 days of trading kind of crunched in data and showing up in one candle. That's why it shows you years worth of data at the bottom instead of weeks, right? So this is the most data, to me, the most data centric or the most valuable chart that you can look at when you're looking at a trend reversal or a trend change.
Right.
Later on in different videos, we'll go into, well, execution of a trade is never based on a long-term chart. Execution is based on short-term charts, and we'll go over that. But I hope did that help answer the question?
Oh, absolutely. I just would like people to understand, when they're looking at one of these candles right now, they're seeing the way, we're not, like you said, we're not going to get into this in depth right now. They're seeing the movement in that month, the highs, the lows, stuff like that, right? And we'll get into that. I just wanted to be clear.
Exactly.
Yeah.
The candle looks like this, right? And then this is the body of the candle. This is how much the market moved from the open to the close. And then there'll be a wick on top and a wick on the bottom. So this is the high and this is the low, right? Now, this candle, if it's a daily candle, will be an entire day's worth of movement with the daily high and the daily low. If it's a weekly candle, it'll be an entire week's worth of movement with the weekly high and weekly low, and monthly would be a monthly high and monthly low. That's what it is. Okay?
Right.
Now, what I wanted to show you here is you can see how the gold market actually in 2016, this actually happened in October 2015. Okay? We were looking at this. When the gold market broke out of this long-term downtrend because it closed over the trend line. You see that right here? That's the big part. When that happened, we knew we could be completely out of this bear cycle. Now what's interesting is as it came down, it went up about 30% or so, then it came down, it never took out this low right here. Do you see that?
Mm-hmm.
That's what confirmed that this is a new bull cycle. And then when it, again, three tops, you see how three tops were formed here? Then it takes out that third top at 1380 to 1400 was resistance for a long time. Then when it took that out, it just blasted. Now, what's interesting that you'll see is it just went through this high on a monthly. So this is a record high that gold went through. See that? Right? This is the reason why it's coming down. It has to come down after you take out a record high, because the markets have become completely overbought. Like on the monthly, so monthly, weekly, and daily, the markets have become overbought, the gold market. So it has to come down and adjust. It's like a monster that needs to breathe before it goes feeding again, right?
Yeah,
so that's what it's doing right now. Like gold, in my opinion, is not done. There's so much more to go. So to answer that question, how far can this go? Where can it go? First of all, very important to understand, markets are limitless, okay? It can go wherever it wants to. So don't ever think in your mind, oh, I think this price is too high, so that's where it's going to stop. I always tell my clients, I always tell my viewers, the traders I educate, the people who take the educational sessions with me, all those, I always teach them this part, that what you think of a price and your emotional reaction to a numerical price, the market has no care. The market does not care about how you feel happy or sad when the price is up or down, right? The market is limitless. So it'll go up as much as you want. And the best example for that is Bitcoin. A few years ago when Bitcoin was 2,000, when it went from $400 to 2,000, people thought that was the highest price it has ever been. It's too high. Guess what it did? It went from 2,000 to 18,000. Okay, so what I'm saying here is you don't want to put price limits on anything. But does that mean you can't have an idea where it will go? Well, here's what you can look at. You will go into the Elliott wave sequence, okay, or Elliott wave theory. And Elliott wave theory, what it means is that most markets will move in three waves, and those three waves will be, there'll be one way that the first wave is this. Right? If we just say it, like obviously Elliott wave is very subjective, right? You can choose it at any portion of a chart. But let's say in this bull market, it started here, right? We know that it started in 2008. So this is the first wave. The second wave is a counter trend wave, which is the wave where it came down. And then the third wave is where it's going, what it's doing now. Usually the first wave and the third wave are equal in size, which means this market has to go up similar in price or percentage to what it did in 2008. That's why people are coming up with a target of $2,500 gold or $3,000 gold. Also, to your point, technical analysis is only great when you don't have a lot of massive fundamental issues going on. If you have massive fundamental issues going on, you can pretty much blind the birdcage with your technical analysis and the charts, right? This is why gold, some people believe, can explode way higher than an Elliott wave target or anything like that. But the best way to answer this question is to say, I don't think the move is done. Don't panic that when gold comes down, there is a significant amount of room left because none of the fundamentals that have caused the gold market to go up have been nullified.
Right, exactly. It's really interesting to see both of those line up. I mean, even myself, I'm still a long-term investor, like I've said, but we see a lot of the fundamentals supporting, and it's really interesting to see the charts. And wow, like I mean, I hope the viewers can see this as well. It's kind of clear as day, especially if we see that three top thing again, like you're saying. What was that called again?
The triple top.
It hits a triple top, right? Yeah, the resistance. If we see it break through that, right, we could potentially see it explode up even more, right?
Yeah, exactly.
So my next question for you, I mean, of course, it's always a consideration to get into gold. Maybe, like I said, I don't know if you think of it, what's your mindset on it? To me, I think of it as a bit of a hedge, but at the same time, now we're seeing the probability for some quite significant capital returns as well. So what is I'm not too sure if the question is clear or not. What's your mindset on gold versus the equity markets? Do you think of the two differently? I mean, there's somewhat quite often inversely related. Do you think of them as something that can be added to an equity portfolio for, a hedging purpose or just for a capital appreciation purpose? What's your mindsets on that?
You know, it's a very interesting question, because especially when you phrase it in terms of the mindset, right? As a trader, and as you get more and more in tune with the market, not saying you'll ever know the market completely, but when you get more and more in tune, kind of reminds me of, some of the older Western movies where they say, when you're riding horses or something, how you can kind of be one with the horse, right? And when you're riding it, then that ride or that gallop is so much more enjoyable than if you're trying your best to remember all the ways that you have to ride. Here's how I would say this. I've always thought that if you've been in a trade or an investment that has massively outperformed anything else that you can do, for example, if you were to take your money and put it in a CD, or you would take your money and put it in a money market account or anything like that, you can easily say that if you've been in the stock market since 2010, your money has grown way more than you expected it to grow if you had it there, unless you did some unnecessary things, okay? If you just did the right thing, I don't even like using the word right, but if you did the correct adjustments, then you would have grown way more than you expected, and your money would have grown way more than any other instrument that you put it in a bank or anything like that. So when people say to me, oh, Mukarram, I would like to leave 90% of my money in the stock market and move only 10% to gold, does that make sense to me? No. Okay, not just gold, but why it doesn't make sense to me is because the individual percentages is up to the person, right? I'm not here to tell you you should do this much versus this much. What I'm saying is that means you don't understand the markets. What you're saying is you want to leave 90% of your money in a place that has the highest probability of taking away your wealth, and only put 10% of your money in a place that has just started moving up significantly, right? So when you ask me about equities versus metals or equities versus crude oil, whatever it is, right? I would suggest, or I would recommend for people to think of, when it comes to moving your money from one asset class to another, move it in a way that you're following the market's direction rather than your own feelings and how you feel about that money being there. Yes, you can have equities and gold at the same time. Yes, you can have more gold and less equities. But what I'm trying to say is, don't be in a place where you keep the bulk of your money in an asset class that has the highest probability of coming down, whether it be gold, whether it be crude, whether it be equities, just because you feel comfortable about that asset class. So if you feel comfortable because you've been in equities for 10 years, don't leave it just there, 90% of it, because you're going to lose a lot of it, okay? Make the movement based on mathematics and probability rather than your comfort level.
Yeah, behavioral finance comes into that a bit too, right? People think what the market, even when we saw in March when the crisis hit here, people think what's happening is going to continue. I mean, I remember I did a video on this a while ago. So I think that's why a lot of people kind of get caught in that trap, is keeping 90 or 95% of their money in equities when, the probability is that they're going to pull back a little bit at least, right? They think it's going to continue because that's what's happening right now. So yeah, that's definitely a good mindset thing. And that's why I think maybe going forward, we could have some really good videos on that. So moving on from this, if somebody is interested, of course, we don't give financial advice on this channel. We don't give financial advice on your channel either. But if somebody is interested in getting into gold, I know that your company, you can, take physical delivery, that kind of thing. But if you're unable to do that, you're uncomfortable with that, is there any good proxies? I know there's ETFs that track gold. What are your thoughts on that? Or is there maybe some companies that you think are good bets? What do you think is the best way to go about it for, the average retail investor?
Okay. So again, that depends on your approach, right? Like, for example, and this is something I think is a very good question to ask, not just because of the type of equities that they can trade, but because, again, the mindset, okay? And what I mean by that is a lot of people, they want to get into gold because the price of gold is going higher, but then they may not have the comfort level, or they may not like physical gold, right? So because they don't want to own a gold American Eagle coin or silver American Eagle coin, or they don't want to put it in their IRA, which, by the way, is one of the best ways to do it, having physical gold. And there's many advantages for it, and we can go into that. But they might say, well, what if I trade a mining stock because I believe gold prices are going up? Okay. Now, here's the problem with that, in my experience. And always, like I said, I like to dissect something back to the real animal, which is the market, right? So you got to go back to the market. If you say to yourself or to your friends or everyone that you should invest in a mining stock that does gold mining because you believe gold prices will go up higher, I don't think it's the correct approach, because gold is a physical asset, a physical commodity. A mining stock ultimately is a company. And the health of a company and the reason the stock price of a company goes up is has way more reasons than just the price of gold going high. Okay, it could be the personality and the effectiveness of the CEO. It could be the way their financials look. It could be their revenue and their income, or some difficulties they've had, like certain mining companies that are in Africa. They have some difficulties with personnel and issues and terrorism and things like that, right?
So at the very least, you might not be able to be you might be missing some of that return.
Exactly.
The way I think of it, right?
Yeah. So why I'm saying that is, if you want to speculate on the price of that mining stock, go ahead and do it. But if you want to get into a mining stock because you think gold prices are going higher, that's not the best approach, because the mining stock will be more volatile than gold will be. And it may not give you the same kind of returns as gold does, because it may have a news that comes out that has something completely against the company, and the stock could drop, but gold can keep going higher. That's why does not mean you shouldn't invest in mining stocks. Do your own due diligence, have your own reasons to do it, but don't come to it by saying, oh, because I think gold prices are going high, I should invest in a mining stock.
Right. Okay. So talking about going forward here, of course, you've seen this crisis unfold. We don't know when there's going to be a vaccine, if there's going to be a vaccine. I think a lot of people have questions on what's going to happen. Of course, I'm bullish long-term, but still there's a lot of uncertainty out there. What do you think is going to happen, post, we'll call it post-crisis? What do you think the post-crisis economy is going to look like? Do you have any thoughts on that?
Yeah, I think everyone can admit that this is a very different scenario or crisis than we've gone through before. Yes, I mean, I've seen the currency crisis in the early 2000s. We've seen, the subprime mortgage crisis, all these things that have happened, right? But here's what's very important, and I like to make sure that everyone can understand this. If you look at the largest economies in the world, like if you take the United States, if you take Canada, you take China, you take all these places, especially the United States, okay, you'll understand that this is an economy that is completely based on consumerism, driven on spending money, okay? And here's the best way to put it. In 2008, when the stock market crashed like more than 50%, and the subprime mortgage crisis decimated retirement accounts and people's wealth and credit and all that, you can still go to a restaurant and spend money. You can still go to a mall and spend money. You can still take your kids to Disneyland and amusement parks and spend money. Spending money is important because that's how the economy makes money, right? Your GDP, all that comes from that. This particular crisis is the first time in a long, long time that we've seen across the world, not just in major economies, but across the world, the way to spend money has been drastically reduced. Yes, can you spend money online? Yeah. Can you buy stuff online? Yeah, but it's not the same as, I live in Orange County, California, right? I mean, you go out every night to eat. The restaurants are full. When you
it's a huge impact on the economy, yeah.
Dude, when you drive from Los Angeles to Orange County, it takes usually 3 hours sometimes, Now you can do that in an hour or less. So that the post-crisis economy, this is what I call street sense. You have to go outside, walk around, even though you have to quarantine yourself. You got to walk around and you can feel it. You can feel that there's going to be a bigger effect on the economy. And because of that, this is why I always tell people, find ways to protect your money, because whatever bouncers you see, whatever money printing induced euphoria that you see may not last, because the underlying system is really being affected right now with if you look at major economies, and also debt driven economies. Like there are some developing countries where debt's not a big deal. There are certain Southeast Asian economies where debt's not a major driver of economy. But if you look at the Western world and you look at countries like Canada, the United States, Europe, a lot of them are debt-driven economies. And those economies could suffer significantly, especially if you had a record high stock market. That's my view on it,
And I think when it's kind of interesting as well, we've seen the tech stocks do so well because of online spending. A lot of unexpected earnings, of course. One of my big positions is Apple, and I follow Apple, and just kind of blow out earnings because, like you said, where else do you spend the money? And then the stimulus coming in, allowing people to, essentially put the money into an iPhone or whatever, right? So, it's kind of interesting, but it's also interesting to see when things kind of calm down and seeing tech pull back. And so it's really going forward. It's a very uncertain thing. I think about it a lot, but it's very interesting to talk to somebody in a different country. Of course, as you know, I'm in Canada. Things are a little different here, but you got to do that boots on the ground approach as well. I know I've heard a lot of investors. I remember a story, I think it was a couple of years ago, a guy who had made a couple million or whatever, just some average guy. He said, you got to get out. You got to see what's out there and open your eyes. So on that note, I think we've done this video a lot longer than I anticipated, but it's always great talking to you. If you're willing to come on again in the future and discuss other things, I think that'd be pretty beneficial for everybody if you're on board with that.
Yeah, I would love it. I enjoyed talking to you. I love the questions, and it's very insightful. And there's a lot of I've always loved some of the videos that you've done. I've watched it because this is the reason I like it, because it's very basic information that a lot of people we assume may know, but they don't. And that's why I love the type of videos you do. So I feel that if you welcome us, or welcome me for further sessions or different videos, we can do different series where, if we can add value to your subscribers, where they can actually make actionable decisions based on what we talk about, that would be an amazing value that you'll be giving to your subscribers.
Exactly. Okay. Well, thanks again so much for coming on, Mukarram. Appreciate it a lot. Guys, don't forget to subscribe, like the video as always. I'm going to leave your links, Mukarram, in the description for Blackstone Commodity and Bullion Night. If that's all right as well.
Yeah, thank you.
And I'm sure we'll see you more in the future. That's going to be it for today, guys. Like and subscribe. And don't forget to check out Mukarram's stuff.
Okay. Thank you, Taylor.
See you later.
Great speaking.
Okay. Bye.